the biggest number of questions on the checklist relate to leverage, and which means that the most failures that most people had in their investments was because something went wrong with leverage. You need to pay a lot of attention to how businesses are financed and how conservative they are on that financing. In my case, what would happen is that the checklist would throw up all sorts of red flags in the case of a business that's highly levered. So, what matters is, with leverage, is it recourse, is it non-recourse, is it at the plant level or corporate level? How stable are the cash flows versus the leverage? What kind of multiples do you have on those cash flows versus your interest payments and all that? So all those things, I think, matters. I think being a good credit analyst is a huge advantage. So yes, I think you need to pay attention. And ideally, you want to look for businesses which generate these large cash flows with virtually no leverage. And so what I had done when we were creating the checklist was to look at permanent losses of capital that had occurred amongst investors that I had a great deal of respect for, and then try to reverse engineer why those losses might have occurred. And the easiest ones to do on that front were Buffett and Charlie Munger, because they talk so much about their mistakes. And many other investors don't talk about their mistakes at all, and some fall in the middle. So in some cases, I had to kind of reverse engineer what I thought the mistake may have been. But in other cases, like with Berkshire, when I looked at Dexter Shoes or US Air or them buying Berkshire Mills and all these different investments they made, or NetJets, for example, the nature of the mistake was obvious, and therefore coming up with a checklist question was easy. Some of the other ones took a little bit more work, but we were able to get there. Before the financial crisis, Longleaf Partners had invested in General Motors, and they, of course, eventually GM went bankrupt. Of course, they lost a lot of money on that investment. And ironically, now I have an investment in GM, but it's not your father's GM anymore. We looked at, I had an intern who helped me do that, and so the checklist questions came out of real failures that I had in investments that had gone south for Pabrai funds and other great investors had. And so we end up with a list of 90 odd questions. So I wasn't particularly planning that the checklist should go in one direction or the other. It was really driven by the mistakes and what those questions were. And then when I reordered the checklist by category. What surprised me is that how beautifully they fell into a few different categories. So there's a significant number of questions, I think more than 20 plus questions, maybe 25 questions, which relate to various types of leverage and failures related to leverage things. Then there's another section that relates to moats and competitive advantage, shrinking moats or non-existent moats, or, mistakes made in thinking about the moat and such. There's a lot of questions around that. Like Dexter Shoes in Berkshire's case Warren made a mistake about that moat. Then there's another section that is on management and ownership. What percent of the company does management own, how they compensated, how aligned are their interests. So all these questions related to management and ownership. And then we get to, some miscellaneous areas like unions, organized labor, environmental issues, and things like that. But the top 3 or 4 categories basically took up most of those questions. And those are the most important things you would think about. You would think about leverage. You definitely would spend a lot of time thinking about moats and competitive advantage. And you definitely want to spend a lot of time thinking about the folks who were running the show, what types of people in history and such that they had.